Welcome everyone to a new video. Today's subject is going to be about the famous investor Michael Burry, the person that predicted the 2008 real estate market collapse, the one that got the movie The Big Short made after him, a very well-known movie.
It's only a matter of time before someone else sees this investment. We have to act now.
How do you know the bonds are worthless? Aren't they filled with fucking thousands of
Pages of mortgages?
I read them.
You read them?
Yes.
No one reads them. Only the lawyers who put them together read them.
I don't think that they even know what they've made. The housing market is propped up on these bad loans. It's a time bomb, and I want to short it.
Through what instrument, Michael? There are no insurance contracts or options for mortgage bonds. The bonds are too stable.
Lawrence, this is what I'm gonna do. I am gonna get a bank to make me one.
As you guys can see here, this is the resignation letter, Scion Asset Management LLC. This is him saying he's going to liquidate the funds, etc. And this is the SEC filing. Registration status says terminated. So if you guys don't know, Michael Burry has been recently making massive bets against the economy for the past years. He's very known to be a contrarian trader where he bets against the stock market, he bets against bubbles. That's kind of his style of trading. As you guys can see here, he's been recently making some massive AI bets, and this is the reason for him to close his fund, because this trade didn't go his way. He was in a serious $800 million to $1 billion short position, shorting mainly Palantir and Nvidia. As you guys can see in the portfolio composition, 66% of the portfolio is Palantir puts. The other remaining 13%, whatever, is Nvidia puts as well. And the market just didn't go his way. I mean, the rationale behind his humongous short position is that he thinks the AI is a bubble and it's going to burst soon. Every AI stock, every AI company is very overvalued. As you guys can see it, this graph explains it perfectly. The source from Bloomberg News reporting. As you guys can see here, Nvidia sitting in the center of all of this, whatever you want to call it, bubble. So apparently the thesis behind his short is that these companies, major AI companies, are investing in each other and buying stuff, selling stuff to each other, and they are pumping their stock prices, therefore increasing their revenue. As you guys can see here, Nvidia, OpenAI, for example, will buy hardware from Nvidia, then Nvidia itself will invest back into OpenAI, then OpenAI will sell a service to Microsoft, therefore Microsoft is gonna buy hardware from Nvidia, and you already know this is classic Ponzi scheme behavior. I mean, all of these companies are correlated in one way, shape, or form. So this is the entirety of the thesis. What happened wrong and what caused them to liquidate the fund, Scion Asset Management, is, in my opinion, bad timing. Because what's ironic about all of this is the day he liquidated the fund, like the 11th of November when he liquidated the fund, a couple days later the market literally collapses and loses $1 trillion in value. As you guys can see, he got liquidated here at the top. I mean, I was eyeing Palantir. These are my levels for Palantir. If anyone is interested in trading the stock, this is what I'm looking at, by the way. And I was not looking into shorts unless I see weakness around these levels. Of course, the fundamentals have to line up. This is just mere technicals. And he got liquidated at the top here. This is the day he closed the fund. And literally the market just collapses days after the market collapses, which is very sad. I mean, you can call it bad luck or whatever, but it is what it is. The thing about Michael Burry, even in the movie, he's been off when it comes to his timing.
How big's your short position right now?
Just the 1.3 billion.
And the premiums?
Well, we pay roughly 80 to 90 million each year, which is high, but I was the first to do this trade. Watch, it will pay. I may have been early, but I'm not wrong.
It's the same thing. It's the same thing, Mike.
You're managing a fund of, what, 555 million? In 6 years, it'll all be gone. On one bet.
There is this one thing though that you people need to understand if you're watching this video. When you bet or you make a decision to short or long a market that everyone is doing the complete opposite, you have to understand that you need the people to be with you. You cannot be the only one shorting something and everyone is buying it, because the price is just gonna go up. If there is demand for the thing that you're shorting, the thing is just gonna go up. And I feel like a lot of people fall for this small mistake. Even someone at the caliber of Michael Burry, I mean, the guy has been investing for 17 years, billions of dollars, and he has a lot of investors, so I assume he knows better than me and you. But like, even someone at that caliber can make such a mistake, that when you make a contrarian bet, you have to understand though that the market does not care about your position, and the market will do whatever it thinks it should do. If people still think Palantir is a good stock to buy and to own, people are still gonna buy Palantir even if the fundamentals are kind of off. I mean, Palantir, for example, like, one in their right mind will buy around these levels, because this stock from the beginning of the year, let's just say from last summer, from 2024 summer, around here, so September 2024 summer, all the way to here, the stock is up 600%. You know what I mean? It's just like, you already know this stock is overvalued. It's a good idea to short it. The stock is not, I don't know if it's adding value or it's not adding any value. I mean, the stock is just overvalued. It makes sense for a retracement. But you have to understand though, if people still believe that Palantir is a good stock to own, it's not gonna go down anytime soon. That's the mistake that a lot of people make when it comes to trading financial markets. Anyways, this is my whole thesis behind what happened. Now let's go to this one picture over here that I have. This is Michael Burry's track record for the past 17 years. So as you guys can see, the best performing year is 2008, when he made 80% on the subprime shorts. And yeah, this is literally like, his track record is pretty solid, to be honest. He also made a lot of money on the GameStop incident, plus 50%, which is very good. And this is his estimated loss year to date, minus 15%. So I guess he just doesn't want to trade these markets anymore. He thinks they're irrational. They're not going to behave the way he wants them to behave. I mean, this is the problem with managing investors' money. Like, you could be right, but like, if people are if your clients are seeing you buy puts and the market is going up, they're gonna demand an explanation and they're gonna demand their money back. So I guess this is what happened. And yeah, man, I'll catch you guys in another video though. Hope you guys enjoyed this one. If you guys wanna have better timing and actually have optimal levels to buy and sell at, check out my timing mastery course. I sell a course where I show people how to time their ideas, fundamental ideas, whatever they be, with pinpoint accuracy. You guys can check that out. It's at a very reasonable price at the moment. And hope you guys enjoyed this video. Catch you guys in the next one. Bye.